All right, did you know you can buy a barrel of oil with an ounce of silver, or you can buy a car with 1 ounce of gold in India? You can buy a car in the United States with 4 ounces of gold. That's absolutely amazing. I get your attention yet? I want to talk to you a little bit about this week about investing, especially gold, silver, precious metals versus crypto. I think everyone wants to talk about this right now. It's definitely relevant and relative to 2025. And then going into 2026, where should we be? I've been doing this a long time. 15 years I spent on the trading floors in New York. I've traded gold, I've traded silver, of course, I've traded oil, natural gas, electricity, corn, soybeans, pork bellies. I've traded everything, but on the floor, I traded gold and silver, and I also traded oil extensively, 15 years. So I got the experience. So I've seen and survived, let's put it that way, inflation spikes, massive inflation spikes in the late 80s. Remember those when we ran up to 20% interest rates because of inflation? It was just ripping. I've seen deflation. By the way, deflation, when prices go down, is more dangerous than inflation. It's worse for the economy. It means the economy can't support higher prices. Deflation is a very, very dangerous economic event. You don't want deflation. You certainly don't want deflation when unemployment's rising. It's called stagflation. When unemployment rises, deflation comes down. Some of the worst economic times during those times. I don't see either one of those happening right now. I think inflation is going to be tame over the next couple of years, especially since oil prices have been coming down over the last year or so, year and a half or so. I've also seen major financial crises. I lived through 1989, the collapse. I lived through 2005, 6, and 7, when the full weight of the financial system in the United States was faltering. We were failing. I remember wondering, at one point, you had to pay the Treasury. You had to pay the Treasury to hold your money. The fear was so great in the streets of New York, in the streets of the financial centers around the world, that you were actually paying them to hold your money to keep it safe. Worse than putting money in a mattress. Unbelievably fearful times. I've seen them. I've lived through them. I've traded through them. And I've seen dollar collapses. Now, dollar collapse is an interesting thing. It's not great for the U.S. economy when the dollar goes down, and it's been going down for many, many years. But it is good for some alternative investments like gold and like silver. Silver and gold used to be, I don't know, some sort of alternative risk, alternative asset class. When I was trading it, certainly on the floor in the 90s and into 2000s, silver and gold were not necessarily a hedge. They weren't strong enough. They didn't have enough volume. They didn't have a big enough presence in the investment world to be considered a real hedge against inflation or other things. They were a speculative asset at the time, and they've really grown up. I'll give you the number. In just gold alone, the gold market alone is about $28 trillion. It's a $28 trillion market globally. As opposed to, let's talk about crypto, it's about $4 or $5 trillion, all crypto assets lumped together. So you can see the difference. Almost 5, 6 times bigger gold is than the cryptocurrency world right now. I think what you need to look at gold and silver as right now, first of all, they've outperformed everything. Right now, silver's up over 100% for the year, 2025. Gold's up 71% as of this taping, which is Monday evening. So massive increase in those assets. And I think part of that is why it's gone up so much. Going towards the end of the year, the hedge funds saw these big numbers up 60, 70% in gold. And they all jumped in to say, look, I have this on my account. Sure, the stock market's been good, 15, 20% across the board, nowhere near what the precious metals have been. So there's no magic to this. There's just a discussion about what to do, what they are, and going forward. And I just want to let you know, I have the experience. I've done this a long time. And we get to, in just a couple of minutes, I'm going to show you some actual gold and silver. I want to talk to you a little bit about where I was and what was going on when I did some of these. I do think now gold and silver have grown up to be a hedge against really negative geopolitical things going on. So if the world does fall apart, you're definitely going to want to be in gold. And I think that's part of the reason why gold has held its value, because people are very concerned. Certainly they're concerned about tariffs. They don't know what it's going to do. If tariffs bring inflation goes up, prices have to go up. That means interest rates have to go up. And that is always bad for the stock market, good for assets that are priced in dollars, like gold, like silver, and like oil. Oil's always been a good investment. Always. Gold has been a great investment over the course of time. I would say gold and precious metals ask, what if everything goes south? What if everything gets really bad? You want to be there. You want to be in the precious metals. You want to be in gold. You want to be in silver. As opposed to crypto, which I believe the mentality is, what if everything goes right? What if interest rates come down? What if there's exuberance in the streets, in the markets? That's where you want to be with crypto. And I think that's why there's a decoupling for the most part of 2025 and maybe a couple of years prior. Gold and silver and crypto have run together. They've been running as a pack together. They go up together, they go down together. And then something happened late 2025 where gold continued its upward path, probably as a hedge against something bad happening. And crypto broke from the mold, broke away from the pack, so to speak, and started to retrace. It corrected. Again, a function of number one being a much younger market with not as many players, not as much volume behind it, $4 trillion market versus a $28 trillion market. Always, the smaller the market cap, the more volatility. Always, more players can move the market around. So I think with that decoupling, people started scratching their head and say, which one's right? Here's what I think, and I'll tell you where I am. I've told this to you a couple of times now. My bond position is almost 60 to 70% of my total investment capital. I'm very nervous about what's going on, what might happen with tariffs and with geopolitics. So I have a huge bond position, as opposed to usually you want to be, I would say 60% stocks, maybe 30% bonds, and then 10% something else. Right now I'm about 65-70% in bonds, and I have gold, I have silver, I have platinum, and I have cryptocurrencies. And I have a couple of, I have Apple. I've always been in Apple. I never not want to be in Apple. And I have NVIDIA because I believe the U.S. will be the AI leader, the global leader in artificial intelligence. So I think this is where you need to be. I think it's safe to be in both precious metals, preferably gold for me. Silver's had a massive run up. I think gold is the one that you always feel safe being in now, not because it's not going to go down. Everything can go down. I just want to be clear. Everything can go down. In fact, this week, gold retraced $200 an ounce in one day. That's because there was so much interest in it. It was building up. It can go down, sure, but it's not. I don't believe it's going to crash the way other things have and could. Cryptocurrency went from 127,000 high in Bitcoin down to 77,000. Now it's in the 80s. It's having a hard time. So I think you can be in both. I think you should have a smaller position in crypto, but be exposed to crypto, but also have gold, have silver, and then at some point, I'm going to move my bond position into some other assets. I'll let you know when, but for now, maybe partially into the first quarter of 26, I will keep the large bond position just because I think it's safe. We're getting at 1.5% middle of the year. I was getting 5% on 2-year treasuries at 3.5%, 3.6%. Not a bad return, certainly not a bad annualized return, especially if you want to go further out, if you're nervous about the economy and the global economy, which I am. Okay, brings me to this. I have quite a selection of, these are actual gold coins. This one's a Australian Krugerrand. There was one point where you couldn't buy the Krugerrand. It was banned. You were not allowed to own these things. I bought those afterwards. Here's a Canadian maple leaf. There's the maple leaf right there. These are all 1-ounce coins. The Japanese panda, uncirculated, as you can see there. And here's some silver. You can hear the difference in silver. Can you hear this? You can hear it. These are silver coins. These are minted before 1962, I believe, was the date that they stopped using real silver. 1957, sorry. So I think in 1960, early 1960, they stopped using real silver in coins because it was too expensive. So I have a bunch of those. Now, the gold price and the gold market and the gold price of these ounces are pretty similar. So if spot gold is, let's call it $4,000, just call it for argument's sake, $4,000 for an ounce of gold. the price for this coin shouldn't be more than $4,050 if you walk into a reputable gold dealer. Problem is there's a lot of thieves out there. They want to say, oh, gold market's $4,300 and they'll charge you $4,500 for a $4,000 ounce. Don't do it. Here, I'll tell you something else too. When you want to sell it back, jewelers will buy gold almost at the spot price of gold. They'll take off 5 to 6%, and what they'll do is they'll melt these down. They'll melt your gold down. So don't let them tell you it's a lot below, let's say 93% of the spot price, because they shouldn't. You'll find someone else to do it. Uncirculated pieces of gold. This is a 1 ounce piece of gold, also worth just about its spot value. The reason why I'm telling you this is because if you have some old jewelry, gold jewelry that's old and beat up and looks like crap, you'll still get a really, really good amount of money for it right now, because you can bring it into a jeweler, a reputable jeweler, make sure they're reputable, big name, and they'll give you about 93 to 95% of the weight of the gold alone in cash. They'll give it back to you at that number. Also, if you have a gold watch, believe it or not, give it to them, find out how much gold is in it. They'll tell you what it's worth with just the gold. They'll pull the mechanism out, okay, and then melt the whole watch down with the band for the gold value. It's another great way of doing it. I would just tell you one more thing. I've been buying and investing in gold forever. I'm not sure if you're going to be able to see this, but right around 1988, I started buying 89. Here's my first receipt for my first purchase. I'll never forget this. First time I had enough money to buy $382 an ounce. Can you see that? $382 for the ounce. Here's another one that you can see it a little bit better. 1991, I start making a little bit of money. Again, I was dead broke when I moved to New York. These were all purchased at New York. Here I bought this, and this one was 91, $382.50 an ounce for the gold right there. So I've been doing this a really long time. I love my metals. I use them as an investment, but I also think that at some point these things are going to be worth a lot of money. As I do crypto, I believe Bitcoin will be $500,000-$600,000 to the Bitcoin at some point, but you're going to have to sweat it. And as Mark Cuban once said, and famously about 10 years ago, maybe even more, maybe 15 years ago, he said, the best play in crypto is put 10% or whatever you can afford, 10% of your tradable asset, and put it into crypto and never look at it. Don't take it out. You can look at it to have fun with it. Never trade it. Never pull it in and pull out. And I'll give you one more piece of advice. Whatever you do in these assets, the best thing to do is don't use money that you need. Use money that you can invest and not worry about. And then just put it in there and don't trade the market. Don't try and buy when it's cheap or sell when it's high. Just keep a regular cadence. Regular buys, regular buys, regular buys. And it's a theory that I've said since day one. I walked on to the trade, after my years trading, I walked on to Fox. I was hired by Fox, and I was the finance guy. I walked on to Fox. First show I was ever on at Fox was the morning show, Fox and Friends. And Steve Ducey asked me, "What's the investment, Bolling? You're our investment guy." And I pulled out an ounce of gold out of my pocket. And I said, "Steve, never sell this. Never sell this." And that was 2006 or so, and it was $600 an ounce then. It's $4,400 an ounce today. Never sold any of them. So, folks, I hope you enjoyed it. If you have any questions, please hit subscribe if you enjoyed it. If you have any questions at all, hit me up. I'm always available. This is where we're going to do it. This is the edge. This is what we do. We do everything from health to investing to performance to motivation. Just want you part of this growing platform. It's more than a show now. It's become a platform. Appreciate you. Have a great holiday season. Have a great New Year's Eve. Please subscribe, because going into 26, we have some amazing stuff for you lined up, health-wise, investment-wise. Really, really successful guys, dudes, motivation, men are going to teach us, you and me, how we become better men, how we become better human beings, how we become better investors, how we become healthier, and always, how do you find your edge? Eric Bolling, The Edge. You can call me The Edge. I love it. All right. It's a little ego, but I love being called The Edge. A couple of people call me The Edge already. Love you guys. Have a great day. Have a great week. Have a great night. And we'll see you again very soon. Bolling out.